Welcome back, friends. Good morning to you all. Once again, we are seeing the Dow futures, S&P futures, and Nasdaq futures sharply red. Now, if you have been watching my videos over the last 1 week, I had mentioned on Monday itself that this is going to be a difficult week for the markets, and it has turned out to be so. We just had a little respite on Wednesday, only to give up all the gains and much more on Thursday. The key driver of the global markets has been the yen exchange rate. And this should concern people quite a bit, the way the logistics are changing right now. Russell Napier, the co founder of the investment research portal, Eric, and Russell Napier has been one of my professors as well. So I've been one of his students. And anyway, he said in a recent installment of his Solid Ground Macro Strategy report that investors have been provided with a glimpse of the impact that a change in Japanese monetary policy can have on the US financial markets. That there is such a strong relationship between the structure of monetary policy in China and Japan and the US asset prices will come as a huge shock for many investors. Many felt that the rally that was taking place was just on the basis of its own merit. There is no doubt that the US economy is a huge one. It's a robust economy. And that such an economy definitely has got great merits of its own, but the yen carry trade has some good impact as well. Now, the Japanese currency is up around 8% against the US dollar over the last 1 month, trading at 148.84 a dollar on Friday. It marks a stark contrast from the run up to the July 4th US holiday when the yen fell to 161.96 per dollar for the first time since December of 1986. So more than a 30-year low for the yen, and that rang the bells in the Bank of Japan, and they caused them to change their monetary policy. There was also currency intervention at that point of time. The rising yen has fueled speculation about whether this would mark the end of the popular so-called carry trade, wherein an investor borrows in a currency with low interest rates, in this case the Japanese yen, and reinvests the proceeds in a currency with a higher rate of return. The new evident vulnerability of the US equity prices to a rise in the yen exchange rate warns of the consequences for the US asset prices and developed world asset prices in general from monetary policy changes in the East. The recent rally in the Japanese currency is an example when selling pressure from the investors seeking to repay their yen debt had pushed prices of the US equities down. Okay, this is a reversal of the yen carry trade. When you go into the yen carry trade, you borrow in the cheaper currency and invest in the currency where the rates of interest are much higher, like in this case the US dollar. When you reverse the Japanese carry trade, what you do is you sell the currency assets which are where the interest rates are about the same, and you return the money where the interest rates were lower but are beginning to rise, in this case the Japanese yen. That's one of my economics 101, or should I call it 301. US stocks have kicked off the month of August sharply lower as fresh data has prompted fears of a worsening economic outlook. The weak data led the investors to worry that the Federal Reserve may be behind the curve in cutting interest rates to fend off a recession. The Dow on Thursday fell nearly 500 points or 1.2%, while the S&P shed 1.4% and the Nasdaq composite slipped 2.3%. A combination of factors have been at play over the past roughly 10-day period. However, corrections like this are absolutely normal. However, the hawkish Bank of Japan caused an implosion of the carry trade over a short-term basis. We have also had manufacturing data out of the United States, such as the ISM data, and they were some employment sub indicators like the initial jobless claims, which have scared the markets. And then overnight, we saw a lot of volatility in some of the earnings, such as Intel, and a not great guidance from Amazon, which talked about the distractions coming from the US presidential elections and also from the Paris Olympics. So they are saying that people are busy watching the Paris Olympics and they are so engrossed with the US presidential elections that they have less time to buy on Amazon. So, a recent downturn in US equities is likely to have a significant ramification for the yen carry trade investors. This negative reaction of the US equity prices could be exacerbated in a financial repression, as the carry trade investors will be forced to sell at the same time as the Japan's financial institutions are forced to sell to purchase the Japanese bonds as directed by the Japanese authorities. With the yen so undervalued, you would find that the need for financial repression in Japan now imminent. Investors could not expect the US equity valuations to rise at this breathtaking pace in the very near future. The moves in the yen exchange rate in the recent weeks and the impact on the US equity prices provide some early warning indicator of the scale of the difficulty for the United States in sustaining the unsustainable when foreign investors enter into a period of capital repatriation to a home bias which will likely last for a period of time. To get to know how long this can last, whether this is just a 1 week wonder, a 10 days wonder, and whether this is going to reverberate across the United States financial markets and the global stock markets in a strong way. Today we saw the Nikkei fall sharply. We saw in India the Nifty and the Bank Nifty fall quite sharply. And all this, if this is going to continue, that is going to have far-reaching impact on the global stock market valuations. To get to know where we are headed in the short term, in the medium term, and the long term over the next few days, few weeks, and few months, please do join our Prime or Prime Plus Telegram channels, which are specifically addressed to forecasting the future of US markets, the Dow, S&P, and NASDAQ. You can do that by WhatsApping us on 982-086-1044. Alternatively, you can also email us at globalmoneyinvestor@gmail.com. globalmoneyinvestor@gmail.com. Happy investing and have a great investing day ahead. Take care. Bye-bye.